That's great. So, welcome you all to 67th monthly session on GST and tech updates. We have been doing these sessions every month to give our participants various updates on the GST. Of course, some of the topics would be repeat for some of the participants if you are attending regularly. The intention of our sessions is to ensure we fintech professionals are always handling Excel day to day, and GST is one area which is day in, day out we are dealing with. The objective of the session is we shouldn't get caught into unwanted notices which are unintentional. Maybe it is because of the system driven. I'm sure today everyone are used for income tax baseless assessments. Even in GST, the notices are system driven. If we are making some mistakes, unintentional, the notices come up. Especially the GST audits under section 65. Most of you would have encountered one or two audits under GST. By now, you also know what is the GST department is looking at. Today's session, we are touching upon two aspects. Aspect number one, input tax credit. One, which is the basics of input tax credit, just as a recap. And in what situations and circumstances the input tax credit that is available, it should not be eligible. Those input tax credit which is eligible and availed, how it can be utilized, the manner and order and manner of utilization. In what situations, even though if there is a balance in your electronic credit ledger, such balance cannot be used. It will get restricted. This is what we are going to see. Most importantly, we will look at it month on month while we are filing GST or 3B. How do we ensure that I am doing a correct method of doing the credit that I am availing? What are the controls that I need to have to reconcile the input tax credit that I am availing, which is there with the books of accounts? What will happen is some credits are appearing in the portal, not there in the books, or vice versa. How to deal with them? How do I know that the right credit that I am utilizing it? That is what we will be looking at the first part of the session. With me, I have two of my colleagues, CA Ashika Agarwal and the CA Jagadeesh, who would be walking us through the whole gambit of input tax credit. Second part of the session, we would be looking at how in the last session, we have got a basic flavor understanding of what is Power BI. Today, we will be looking at connecting Power BI directly to Tally and prepare financial statements. And if you are posting some entries in the Tally, how the financial statements are automatically updated. That is what we are going to see in the second half of the session. Yeah. It's 3:04. We will end up the session approximately at 5:30. Feel free to ask any questions that you have. Put your questions in the chat box. We will take up those questions. In the interest of the larger audience, all of you have been muted. Nevertheless, you raise your hand. We will unmute you at an appropriate time. You can interact with us and also have your questions be resolved. So on this note, let us start the session, and I welcome Ashika and Jagadeesh. Please start the session.
Thank you, sir. I'll share my screen. Okay, hope my screen is visible to you all. So the agenda of today's session is this one. Already this one, Venu sir has briefly told about today's session agenda. So first we'll start with the basic provisions of ITC. So these are all the sections which governs the input tax credit, the GST law. So we'll discuss in detail about this section in detail each in the later slides. First, we'll see what is the input tax. input tax credit. Okay. This input tax credit has been defined in the section 2, subsection 62. As per section 2, subsection 62, input tax credit means credit of input tax. We'll see what is the input tax now. Input tax is defined in section 2, subsection 62. Input tax means CGST, SCST, IGST, UTGST charged on any supply. This includes IGST paid on import of goods and a tax paid under section 934, that is the RCM under CGST. Similarly, RCM under IGST and reversal paid under SCST and UTGST Act, but excludes the tax paid under the composition levy. So this is the exhaustive definition. Any tax paid under forward surge or the reverse surge, all the tax paid would be available to the recipient to claim as a credit. So only the ITC paid on the composition levy, only that part will not be available, because in the input tax definition only that has been excluded. So now coming to the components of the input tax credit. So that the input services and the capital goods. We'll see what the input means. Input means any goods other than the capital goods used for the used or intended to be used by the supplier in the course or furtherance of the business. If you see here, inputs means any goods. It covers all the goods. Okay. Now we'll come to the capital. What is meant by capital goods? Capital goods means capitalized in the books of account of the person who is claiming the ITC, which are used or intended to be used in the course or furtherance of the business. So all the goods are covered in order to avail the ITC. So now coming to the services. What is meant by services? Any service used for intended to be used by the supplier in course or furtherance of the business. It means any goods, any services. On that we can claim the ITC, provided it should be used or intended to be used. Now we'll see what is the section 16. In section 16, we'll have the eligibility and conditions for availing the ITC. So who can avail the ITC? We'll see section 16, subsection 1. Every registered person. So it starts with every registered person. That means only registered person can avail the ITC. So every registered person shall, subject to such conditions and restrictions as prescribed in the section 49, can take the ITC which are used, that is the actual use or intended to be used. Even if you have an intention to use in the future, in that case also he can avail the ITC. So the said amount shall be credited to the electronic credit ledger of such person. Here, if you see the section 16, section 49 has referred. What is section 49? Section 49 is about the payment of the tax. So as per section 49, subsection 2, the input tax credit as self-assessed in the return of the registered person shall be credited to his electronic credit ledger in accordance with the section 41, that is the availment of the input tax credit in such manner and prescribed. We'll see what is that manner and prescribed in the next slides. So section 16, subsection 2. These are the preconditions which need to be satisfied by the recipient in order to avail the ITC. We'll see what are those preconditions. That's the basic conditions. So the recipient should possess the tax invoice or debit note or any tax paying document. Well, what would be the tax paying document? It may, in case of the imports, it may be the bill of entry or any document issued in case of ISD. We'll see what are all the documents on which we can avail the ITC. The next one. And next to that, details of invoice or debit notes should be furnished by the supplier in GST R1, and that should be communicated to the recipient as per section 37. That means now the input tax credit related to the return that should be filed by the supplier. That is, if the supplier from whom I have purchased the goods, if we have not filed a GST R1 and has not communicated to the recipient that is, it should, those invoices must reflect in the GST to be other, in that case only I can avail the ITC. And next condition is that he must receive the goods or services or both. Without the receipt of goods or services, he cannot avail the ITC. In case of goods received in lots or installment, he can avail the ITC only after receipt of the lot or installment. Before that, he cannot avail the ITC. Let's take an example. If first lot has received in the 31st March and the last lot has received on the April 5th. In that case, I can avail the ITC on April return only, not in the March return. Now coming to the next condition. ITC should not be restricted under section 38. What are all the restrictions, conditions placed in the 38? We'll discuss in detail about all those restrictions in the later slide. And tax surge in respect of such supply should be paid to the government by the supplier. So if supplier has not paid the tax charge to us to the government, in that case, we are not allowed to take the ITC. So has furnished a return under section 39. That is GST 3 must be filed in order to avail the ITC. And payment to the supplier within 180 days. If we not made the payment to the supplier within 180 days, then we need to reverse the ITC. This is the post condition. But above what I discussed, all are the preconditions to avail the ITC. Now, coming to the documents. So what are the documents on which I can avail the ITC? The list of the documents as per the section, rule 36 and following documents we can avail the ITC. We'll see what are all the documents on that I can avail the ITC. First, invoice issued by the supplier in the self invoice in case of the RCM supplies, that is the inward RCM, or the, in case of import of service. And next to that, debit note, even debit note we can avail the ITC. In case of import on bill of entry, I can avail the ITC, and revised invoice and document issued by the import service distributor. Okay, on all the documents, I can avail the ITC. Based on this, I can avail the ITC. So one of the condition, one of the condition to avail the ITC is that I must receive the goods or services. So here the query is physical receipt of goods is at site A, which is a registered place of business, whereas the consumption takes place at the site B, which is not the registered place of the recipient. Is the ITC, just a second.
So there is a question by Kumar. So he wants to check if the goods are in transit, are we eligible to get the ITC before we receive the goods? Now let us take this situation where I have made the purchases on 30th April. I have made the purchases on 30th April, and the goods have received on, let's say, 1st May, 2nd May. Now, typically, this is the situation that we are looking at when the goods are in transit. In my view, while you are filing your input tax credit reporting in GSTR 3B on 20th May, by the time the goods have been received, of course, there are other conditions which Jagadeesh has listed where it has to be appearing in GSTR 2B, etc. Considering all other conditions are met, supplier has filed the returns in time and everything, I am of the view you can take the input tax credit as long as on the date of availment of input tax credit, if you have satisfied the conditions that are to be required, so you will be able to do. However, as on the date of you are availing the credit, if the goods have still not received to you, you are not eligible to take the input tax credit unless you receive the goods. If you are availing the credit even without receipt of the goods, it will tantamount to bill trading and take availment of credit fake billing. So better be careful on it. Any other questions? All right. So yeah, Jagdish, you can continue. Shivram is saying only if it is seen in GST or 2A, you can take the credit. So what are you talking about material received? Shivram, so it's not just visibility of a line item in 2A. You also need to satisfy that the goods should also be received. Both condition needs to be have to be met.
Okay, coming to the queries, here a recipient has received the goods in the site A, which is the registered place, but whereas consumption takes place in the site B, whether ITC can take on this or not. We'll explain this with a small example. So A, who is the registered person, has purchased an air conditioner. He mentioned in billing address, the office address, but it delivered to his residence. In his registration, his residence is not added as an additional place of business, whether he can avail the ITC or not. So, in this case, ITC cannot be availed. It should reach the goods to the registered place of business. If his residence is added as an additional place of business, then in that case, he can avail the ITC. So, for the billing address and the delivery address should be registered with the recipient business. Now, coming to the next one, a registered person is not in possession of physically signed document, but has a digitally signed invoice issued by vendor in the soft copy. Whether there will be any issues in claiming the ITC on this. So one of the conditions, the first basic condition to avail the ITC is that he should possess the tax invoice. Whether the tax invoice should be original. Whether we can avail the ITC based on the soft copy. So if we can avail the ITC, just put a comment in the chat box as an S on the whether we can avail ITC on duplicate invoice. Sir, your view, sir. Hello.
Okay. So now the question that also comes up is what are the documents that needs to be there? Whether the physical documents and things, considering the rule 36 from the recipient perspective, you can also take the credit if you have a document which is sufficiently showing all the information. And in terms of the receipt of goods, the constructive receipt is also deemed as a receipt. If instead of receiving at my registered premises, if the goods are received in some other premises, which could be a bill to ship to location, as long as the transaction is a genuine transaction, input tax credit would be available.
Yes. When the invoice with the digital signature is allowed in the rule 46. So we can avail the ITC on the document. So going on to the next. ITC based on GST 2B. So this is the new clause added to the section 16 subsection 2 with effective from 1st Jan 2022. So as per this section, ITC can be availed only if the supplier from whom I am purchasing has filed his GST 1 and details have been communicated in such manner as prescribed under section 37. So here the mode of communication is the GST 2B. So as per rule 36, sub rule 4, input tax credit cannot be availed unless the details of invoices or debit notes as furnished by the supplier in the GSTR1, and those details should be communicated to the recipient in the GSTR2B. Unless these two things happen, recipient cannot avail the input tax credit. So if you see carefully the way section 16 subsection 2 clause A is drafted, is that it refers only to the invoice or the debit note. Okay, so whether this provision applicable to the ITC availed on import of goods, services, and RCM, the answer is no. Because if you see the section subsection 2 clause A, it refers only to the invoice or the debit note, but not the bill of entry. Will avail the ITC on import of goods and import of services based on the bill of entry and self invoice, but not based on the invoice or the debit note. Therefore, the provision have no impact on the ITC avail on import of goods and import of services and the RCM. So before moving on to, we'll see the history. So how GST has evolved since from its implementation. So as you all of know, from in 1st July 2017, Act has implemented, and somewhere in the August 2018, GST 2A has started reflecting in the portal, and from 9th October, Rule 36.4 has introduced. As per Rule 36.4, put the restriction in availing the ITC. At the time of implementation, that is on 9th October 2019, it allows the maximum credit of what is reflecting into a plus 20% of provisional ITC, and later on it go on decrease to 20, 10, 5, and from 1/1/2022 it completely allowed the provisional ITC, and what the ITC reflecting in GST 2B, only that ITC we can avail the avail in the GST 3B. And in the August 20, from August 20, GST 2B has made available on the GST portal, and from 1st Jan 21, GST 2B is recognized as a return under Rule 60. So this is the background, little background about the GST 2A, 2B, all the things. So as it said in the previous slide, that from 1st Jan to 2022, I cannot avail ITC if it is not reflected in the GST 2B. What will be the impact on the ITC already availed? That is before 1st Jan 2022. And would there be any, and what is the status of the ITC that have to be availed post 1st Jan 2022? So we'll see. Nowadays, the department is issuing a notices on this only. Out of 100 notices issued by the department, 90% of the notices on this only, the mismatch of credit between the 3B versus 2A. So how can we handle this this thing? That is before 1st Jan 2022. So if you see here, from 2017, from 1st July 2017 to 8th October 2019, there is no explicit restriction in availing the ITC that it should reflect into, and no restrictions are there in order to avail the ITC. But whereas from 9th October, Rule 36.4 has inserted with the 20% provisional ITC allowed. So if I receive any notices for period 2017-18 and 18-19 and asking to reverse the ITC because of that, those invoices are not reflecting in the GST 2A. In that case, I can say that at that time there is no concept of GST 2A. There is no concept of the GST 2A. I can take the shelter by using the. So, but from 1st Jan 2022, I cannot take the shelter. I mandatorily reconcile. Only the reconciled ITC only I can avail. So, moving on to the next. As I discussed that
in this,
yes.
Adding one more thing, Circular 183.
Yeah.
Circular 183, which the department and issue a clarification with respect to GSTR 2A versus GSTR 3B difference. So it is basically issue for the financial year 17-18 and 1819. As you all are aware, as Jagadeesh discussed over here, that GSTR 2A was initially introduced only for the purpose of helping the SSC to reconcile, to check whether there is any ITC missing or not, and to help them. The purpose was not to disallow the ITC on the same. Though, as of now, as on today date, the department action is they are blindly issuing notice on the basis of difference between 2A and 3B and demanding the SSC either to explain it or to reverse the ITC on it. But by way of circular 183, they have clarified, even though the transactions are not reflecting in GSTR 2A, ITC will not be straightforward disallow. In circular, they have specified certain conditions which need to be fulfilled in order to be eligible for the ITC, which are not reflecting in 2A. There are 4 conditions they have specified, which already Jagadeesh has discussed in the initial, that there should be receipt of goods and services and possession of invoice. In addition to that, they want that make sure that the supplier of which transaction are not reflecting in GSTR 2A, they must have filed their 3B. So their first and foremost condition is that he should, that supplier of yours should be compliant in filing 3B, so that there is no short payment or no tax payment to the government. If that is comply on the basis of by complying with other condition of 16.2, 2017-18 and 18-19. But this circular is only for 2 years. For other years, department has not clarified, government has not clarified how they are going to proceed for it. Over to you, Jagadeesh.
Okay. Coming to the restriction under Section 38. Section 16 provided that in order to avail the ITC, that ITC should not be restricted by the Section 38. We'll see what are all the restrictions that are provided in the Section 38. So the details of ITC in respect of the said supply communicated to the registered person under Section 38 had not been restricted. We'll see what are the restrictions. When the supplier is newly registered. So if you procure any goods or services from the person who is newly registered, in that case, ITC will not be available. This is at 2 and 4 rules are at to be prescribed on this Section 38. So in that case, and next condition is that supplier filed GSTR1, but 3B has not filed. Has filed the GSTR1, and it is reflecting in my 2B. I have well in the month of the December, let's say. But in the he has not filed the December 3B. In the month of Jan, for me, it will show it as an block ineligible grade, like put in restriction to avail that ITC. It will be marked as a restricted ITC. In that case, also, I'm not allowed to avail the ITC. Whereas supplier has reported more liability in GSTR1 than GSTR 3B. In that case, also, I'm not allowed to avail the ITC from that supplier. And whereas 3B for GSTR 3B is more than the GSTR 2B. The ITC in GSTR 3B is more than what is reflecting in the 2B of my supplier. From that supplier, I am not allowed to avail the ITC. And substantial taxes discharged through the ITC. Whereas out of 100, he is paying taxes using the input tax credit. Government might expect it to pay at least 1% through the cash. So in that case, this is also at to prescribe the rules for this, and any other class as may be prescribed by the government. Maybe the person who involved in the fake invoicing cases all may be included under this category of persons. So in all these cases, I am not allowed to avail the ITC. Even if I satisfy all the conditions, I possess tax invoice, I have received the goods, services, and supplier has made the payment to the government. Even after satisfying all those conditions, if these restrictions are there, then in that cases, I'm not allowed to take the ITC. Now, Coming to the next clause, payment of tax to the government. So section 16, subsection 2, clause C. If you see the how the section 16 subsection 2 clause C drafted is subject to the provisions of section 41. The tax surge in respect of such supply has been actually paid to the government either in cash or through the utilization of input tax credit. That means the tax what my supplier has charged to me, he should remit the tax to the government. Otherwise, I am not allowed to avail the ITC. How can I know whether my supplier has paid the tax or not? Whether there is now GST 2B is there, GST 2A is there. Before that, there is no mechanism to track whether my supplier has paid the tax or not. Even from 2A also, I cannot determine whether my supplier has paid the tax or not. Now, in my portal, whether my supplier has filed 3B or not, I can track it out. But whether he has paid the tax on the supplies I received from it, paid to the government or not, I cannot determine even now also. So, coming to section 41, what section 41 subsection 2 is saying is that where my the credit of input tax credit available by the registered person under subsection 1 in respect of such supplies of goods or services are both tax payable whereon has not been paid by the supplier shall be reversed. If he has not paid the tax, I have to reverse the tax. Once he paid the tax, then I can reavail the tax. If I have not paid, I have to reverse the credit. Once you make the payment to the government, then I can reavail the ITC. So department is issuing notices on this also, saying that your supplier has not filed a 3B or not discharged the tax. So you are now have to reverse the input tax credit. On this issue also, department is issuing many notices. There are also few judgments on this. They were Bethel Enterprises, wherein it was held that first only in exceptional cases you have to collect the tax from the recipient. Otherwise, you have to collect the tax from the supplier. In the so we can use the judgment as a grounds to defend the notices received under this section. So now coming to the next one, Rule 37A. This is the new rule which has been inserted as per the Rule 37A. If my supplier has not filed a GST or 3B on or before the 30th September of the subsequent year, then I need to reverse the ITC on or before the 30th November. If you see the first case, has filed a 3B late, but he has filed a 3B before the 30th September of the following financial year. Then I have availed the ITC in the earlier, then I no need to reverse the ITC because he has filed the GST 3B before the 30th September of the following financial year. If you see the second case, he has not filed his 3B before 30th September. Let's say he has filed the return in the December. In that case, I have to reverse the ITC on or before the 30th November. If I not reverse the ITC before 30th November, then I need to pay the interest from 30th November, that is from 1st December, till he filed the GST 3B. Once he filed the GST 3B, let's say he has filed on 31st December. In that case, I can reavail the credit. So how to disclose, we'll see. How to disclose this type of issues in the GST 3B. So in the first case, he has filed the GST 3B late, but before 30th September only, he has filed the GST 3B. In that case, it will be reflected in my GST 2B, and I will avail the credit. I will take the credit in the 4EFI table, that is in the all other ITC table. Let's in the second issue, in the second case, he has not filed his 3B before 30th September. He has filed his 3B on December following of the following year. In that case, I need to reverse my ITC. So where I have to report that. So I will take it in the 4EFI because it is reflecting in my 2B, and will reverse in the 4B2. That is the temporary reversal. Okay. And then in the December month, in the December, he has filed his 3B. In that case, I will report it in the 4A5, that is the all other ITC, and will report in the 4D1. That is the previous year, previous period ITC available in the current period. So 4A5, 4D1. First, what I will do, the 4A5, I will report, and in the 4B2, I will reverse. On reavailment, I will report in the 4A5, all other ITC in the 4D1. Previous period ITC available in the current period. In this way, we have to report the ITC in the GSTR 3B. So, moving on to the next one, payment to the supplier. So, this is the post condition. We need to satisfy in order to avail the ITC. What, as per this, we have to make the payment and to our supplier within 180 days from the date of invoice. Otherwise, we need to reverse the ITC. So, along with the interest. Once we make the payment to the supplier, then we can reavail the ITC. Let's say, okay, I have on 31st, invoice date is the 31st March 2022, and I have not made the payment till the 30th September 2022. But I have made the payment on 31st December 2022. Then I can reavail the ITC on 31st December 2022. That's the case here. So this is the post condition. Even after availing the condition, we need to satisfy the post condition in order to avail the, in order to retain the ITC. So coming to the other conditions of the input tax credit.
1 minute.
Yes.
That is back to that one reporting.
This one?
Back. Yeah.
Yes.
Like Jagadeesh discussed, this is very important. As of now, whatever Jagadeesh was discussing, you can understand how much
Ashika, your voice is breaking.
Voice.
It's not clear. Ashika?
On
Okay, participants, so this slide is very important for multiple reasons. All this while we were looking at if a supplier has filed his GSTR1 and the credit is visible in 2A or 2B, we are going ahead and taking the credit. Now, the new rule has inserted a ownership that every registered
while reporting
input tax credit has to go ahead and check whether the recipient, whether the suppliers have filed their GSTR 3B or not. Now it will be very difficult task for you to check every time. So they have given that relaxation and said, check it at least once in a year. By when? By 30th September of next year. And once you are checking that the supplier has filed 3B, well and good. Even if he has filed late, no issue. Like 3B is filed but late, but before 30th September it is filed, no issue. That's what the Jagadeesh has mentioned. So it's important now for all the vendors where you have taken the input tax credit, take the GSTR 2B period. Let's say you have a supplier from whom you have made a purchases for whole of the 12 months. You have to ensure that supplier has filed all of the 12 months. Now, do I need to do all of the 12 months? The answer could also be no, if you, because we know that if you have don't file return in 1 month, the subsequent return cannot be taken. So all that you have to do is wait for the next month to see. So we are in May 23. Just see GSTR 3B filing status as on March 23 for all of your suppliers. If as on March 23, all your suppliers have filed GSTR 3B, then you are okay. Otherwise, you are at this risk of reversing of input tax credit. So this is one important notification. This got released at the end of the last year in the host of the notifications that have come. This is one of the notifications that has come. Yes, Jagadeesh.
Yes.
So one more thing, payment to supplier within 180 days.
Yeah.
So in payment to supplier within 180 days, now they have come up with one change. Now the problem was that whether it's a full payment or a part payment. So what was happening if in case of any dispute, the recipient were making a part payment. Now the question arises whether full ITC will be disallowed or a part of it. Now they have clarified to the extent of amount unpaid.
Unpaid.
To
Proportion.
that proportionate, you are required to reverse the ITC. So it's not that if your full payment, if you have made part payment, full ITC will not be allowed. That is not the case. They have clarified, and it is 180 days. It's not 90 days, 365 days. As per GST law, you have to make sure you make payment within 180 days. If payment is not made to the extent of proportionate unpaid amount, ITC need to be reversed.
Yeah.
Okay, moving on to the other conditions. Section 16, subsection 3, where if the recipient has claimed the depreciation on the input tax credit, then he is not allowed to avail the input tax credit. And coming to section 16, subsection 4, this is the post condition that it prescribes the time limit to avail the ITC. So ITC earlier the time limit is up to September per return, but now it linked to the 30th November date. So ITC has to avail on or before 30th November or due date of filing annual return, whichever is earlier. So we'll see the queries. Whether DY in the previous slide, I discussed about this judgment by Reavailment Enterprises. In this, what happened is recipient had made the payment to the supplier, but supplier had not made the payment to the government. So whether the ITC recipient is required to reverse the ITC or not is the issue. So what the court has held that no, first you go and initiate the proceedings against the supplier, but now you cannot collect the money from both from the recipient and the supplier. First you initiate the proceeding against the supplier, then only in exceptional cases you can come to the recipient. So that's the judgment about the Reavailment Enterprises. So in this, whether Reavailment Enterprise judgment will be sufficient to stop all the possible recovery of taxes from the recipient? The answer is no. Only in genuine cases you can take the shelter using this judgment. So next query is, if ITC is missed out to be claimed in returns, can it be called as valid credit only, since it's the same as in books? I have availed my ITC in my books, but I have not claimed in my returns, and the time limit to avail the ITC has lapsed. Whether I can claim the ITC or not? What is the time limit to avail the ITC? I discussed in the just previous slide. That is the 30th November of the following financial year for this year, or on or before the filing of the annual return, whichever is earlier. So I have not availed my ITC in my returns. Whether can it be called as a valid credit? Availment means availment in the returns, not in the books. So if you don't avail the ITC in returns, you cannot avail ITC after due date of availing ITC. If the returns are not filed within the timelines under section 39, or the returns are filed belated basis, can it be claimed as valid? We'll explain this with a small example. So I have not filed my March month return, this March 2023 return, but the same was filed this year, and that is 31st December 2023. Whether I can avail the ITC March ITC in the December month? Actually, availment of ITC is linked to the date, not the period of filing the returns. It is only to the dates, that is 30th November 2023. On or before only I can avail the ITC. Even though I filed the March month return in the December 2023, I cannot avail the return. I cannot avail the input tax credit. So next step is, the payment is not made to the vendor within the time of 180 days. And if the same has been pointed out during the audit. Also, if the payment has been made subsequently, was reversal and reavailment mandatory? So in the previous slide, the Ashika also said that we have to make the payment within 180 days. Otherwise, we need to reverse the credit in proportion to the unpaid amount. So in that case, do I need to reverse the ITC? The reversal and reavailment mandatory. So in this case, what a vendor has made it during the audit, it is observed that recipient has not made the payment within 180 days, but later it has made the payment. So only the interest will come in this case from the expiry of 180 days from the date of invoice till he make the repayment to the vendor. For this period, he need to pay discharge the interest at the rate of 18%. You no need to reverse the entire ITC. Only the interest I need to pay. So reversal of outward tax liability by issuing the credit notes. Whether this whether the taxpayer can reduce the liability by issuing the credit notes. Okay. As per section 34, we cannot write that credit notes or debit notes as we like it. Only in certain cases, we need to write the debit notes or the credit notes. Is it mechanism to so for negotiation also we cannot simply issue the credit note. Only if there is any excess taxable value or tax has been charged, or if there is any deficiency in services or shortage of goods have been sent to the customer, then in such cases only in specific cases we can allow to write the credit note. For all the cases and negotiations, we cannot issue simply write the credit notes. So any debit note received at any point in time shall be valid to avail the ITC in an year without any linkage to the transaction. Earlier, there is a linkage of debit note with the original invoice. Now that linkage has been removed now, there is no time limit to issue the debit note because there is no link with the original invoice. So you can write the debit note even after the September. Earlier, there is a time limit to issue the debit note. That is on or before September, you need to September of the following financial year, you need to raise a debit note. Now that linkage with the original invoice is not there. So now you can raise a debit note at any time. So do you want to add anything, sir, in this? Okay.
Nothing at this point. Please continue.
Okay. Blocked input tax rate. What do you, Ashika? Hello.
Yeah.
Yeah, what do you, Ashika?
Huh.
Again, blocked input tax credit is one area where we notice there are a lot of issues that come up during the departmental audit, because the input tax credit, when it is availed by the accountant, he doesn't make a distinction that whether this credit is eligible or not. See, when we say eligibility, generally anything purchased for the business ideally should be available. That's what section condition says, that used in the course of furtherance of the business. So it might be something that it will be used now or it could be used later. But there are also situations where even though it is for business that is been blocked, some of the people have missed checking whether it's eligible or not. Let's quickly take another 15 minutes in seeing the blocked input tax credit. Yes, Ashika.
So as sir said, even though it is used for business, then also the government has specifically disallowed the ITC on certain type of supply of goods and services. So let's discuss one by one. Number one is motor vehicle. Now, motor vehicle, when this come under block credit, they are only stating about passenger transport vehicle. So if there is a passenger transport vehicle, then only you have to see whether you covered under the block credit or not. For a good transport vehicle, there is no such condition. You are fully eligible for ITC. For passenger transport also, eligibility has been given by way of certain exception. They are saying that on passenger transport vehicle, ITC will be allowed if it is having a sitting capacity of more than 13%. Then you can claim ITC. Where the passenger transport vehicle, motor vehicle, you have procured for the purpose of further supply, means trading. Where you purchase and sell in the vehicle, then also ITC is allowed. Where it is you are using as a for a transportation of passenger, then also ITC is allowed. Or for imparting training, then also you are eligible for ITC. But if the sitting capacity is less than 13%, then this block credit will come into picture and you won't be eligible for the ITC of the same. Now the motor vehicle, obviously, which you are procuring, for that also for day-to-day running, you will be incurring the repairs and maintenance service, insurance, you also will get this vehicle insured. So related expense in relation to motor vehicle is also proposed to disallow. But if you fall into eligibility criteria, then even the related expenses on that also you will be eligible for ITC. But if you fall into ineligible criteria, then the related expense in relation to motor vehicle will be disallowed. Then come the employee related and personal nature. Now in this, what they have covered is food and beverage, outdoor catering, beauty treatment, health service, cosmetic and plastic surgery, life and health insurance, leasing, renting, hiring of motor vehicle. If any of this is an expense in your company, make sure you don't avail ITC on it, even though it is for the business purpose. Means even though you are incurring it for the purpose of business, this are specifically disallowed. Now, but there is an exception to this when the same has been allowed. If you are in the same line of business, means you are procuring the catering service for the purpose of providing the catering service. If you are in same line of business, then only ITC is allowed. Another exception is when it is provided as a part or parcel of a principal supply or another service supply. That is a concept of composite or mixed supply. So like your consultant, if you are into an IT sector and you are giving your employees on hire to a other person for the professional services. So the person whom you are giving hire, you might have incurred rent expenses. Now that rent expenses, obviously you are going to bill to your customer. Now the rent expense which you have incurred, though it is covered under block credit, but being a part of composite supply, which you are going to charge to your party, you will be eligible for same. Another example, like boarding school, when providing this with the food and beverages, when boarding is given. So in a hostel and all, when it is given with food and beverage, it's become part and parcel of the main service. Then also ITC will be eligible. So it's only few exceptions, then only you are covered. Otherwise, it is specifically disallowed. Another thing is when it can be allowed is when it is mandatory under law. Like many of the, if you are having a factory, under Factory Act, there are various conditions under which you have to comply in order to continue a business. One of the condition of Factory Act is like if you are having a capacity of your employee more than 100, you have to provide canteen service to your employees. In that circumstance, even though it is covered under block credit, but due to the exception provided under it, you will be eligible for ITC of the same. Now, over here, the major thing the people forgot to do the reversal is in case of motor vehicle. Wherever they are entering rent-a-cab expense, there you need to make sure you disallow the ITC. Then life and health insurance is also a common expense which most of the companies incurred. That also you have to make sure if you have availed, so reverse the ITC on the same. Another is membership of club, health, fitness center, and travel benefit to employee. Because these are basically in the nature of personal consumption of the employees. That's why it has been specifically disallowed. Then works contract and construction service. It's another litigation area where lots of IETC has been tried to be blocked. But it need to be understand over here, the blockage is only with respect to construction of immovable property. So works contract and construction service in itself is not ineligible until and unless same is for in relation to immovable property. Plant and machinery is specifically excluded from it. Even the support structure which is required for the plant or machinery is also excluded. Means you are eligible for ITC for plant and machinery. So over here, in order to check whether you are eligible for ITC or not, you have to make sure first that it should not be for construction of immovable property. Even if it is construction of immovable property, if you have not capitalized, you have expense of to the PL, you will be eligible for the ITC of the same. So you have to check two things, whether it's a construction of immovable property or not. Second, how you have treated in your balance sheet, whether you have expense of to PL or whether you have capitalized. If you have capitalized and it's for construction, then only it is disallowed. Otherwise, you are eligible for it. Another important thing to note over here is construction simply doesn't mean new construction. They have given an expanded definition of construction. Like you can see that construction, they include reconstruction, renovation, addition, alteration, or repair. But it comes with a condition to the extent of capitalization to said immovable property. So construction definition is very expanded. You need to be very much careful. If you have any of this categories of, and it's not only works contract service, any goods or service used for construction is covered over here. So check for this. If any of this ITC you have claimed, make sure you reversed it. Then come the other block credit, composition taxpayer. It's obviously as a composition taxpayer, you are not eligible for ITC of it. Similarly, as a recipient of composition taxpayer, if I am receiving any expense which I have incurred, the supplier of which is covered under composition, if the invoice which is going to issue, he can't charge tax on it. Therefore, the question of availing ITC also doesn't arise. Then goods or service received by a non-residential taxable person, except on goods imported by him. Being a non-residential taxable person, I'm not eligible to claim any ITC. Though I have a provision to claim the refund, but I can't because I am not liable to pay any tax in India. New insertion which has been made is CSR. ITC on corporate social responsibility to end the long pending issues which was going on the ITC eligibility of corporate social responsibility. Now the government has clearly shows his attention that any expenditure which is incurred toward corporate social responsibility is not allowed. So make sure now onwards from 1st April, whatever expenditure if incurred in CSR, make sure you don't avail ITC on the same. Then goods or service used for personal consumption. Obviously, the first thing when start with section 16 is it should be used for business purpose or used in the course of furtherance of business. Personal consumption does not qualify in this and therefore ITC will be straightforward disallowed. Good lost, stolen, destroyed, written off or disposed of by way of gift or free sample is another point of dispute where lots of cases are pending, because over here, the first issue which arises is what over here goods mean, whether it's referred to input or it's referred to finished good. Some different thoughts of opinions are there, as it is referred to as input tax credit, which is avail on input. So basically it should be on account of loss of input or stolen of input or destroy of input or written off of input. It should not be a case of finished good where I should be required to reverse the ITC. Then when I am giving by way of free sample. Now free sample is another point where the thing is that it is given for the purpose of business, even though over here the government has specifically shows that it is not going to allow the ITC. So if any of you has happened any of this condition where either you have written off the input, it may be due to anything, that there may be a loss or it become that it is not in a usable condition, therefore you have written off or sale of as scrap. If you have sale as a scrap and you have received any amount, then there is no need to reverse the ITC. Because when you are selling as a scrap, there is an inflow of a consideration. Therefore, ITC avail on such inflow is not required to be reversed. Tax paid. Now, if there is a case where you have made the payment, consequence to any department audit, any investigation where there has been identified that there is a fraud. Most of the time when the department initiate any proceeding, they initiate under section 74, that is a fraud case. So whenever any proceeding has been initiated and pursuant to that, your supplier has made the payment, you can't claim ITC of the same. In that case, ITC is specifically disallowed. Similar is the case where there is a case of section 129, that is a detention, seizure of goods or conveyance, or section 130, confiscation of goods or conveyance. These are basically deals with the cases where there is a fraud or where there is an intention to evade a tax. Under such circumstance, you can't avail ITC. But this all depend upon the proceeding of your supplier, because supplier might say you that you pay me the ITC part, anyhow you will be eligible for ITC if you pay me the tax on being pointed out by the officer. Never pay to your supplier. If you pay, you won't be eligible for ITC on the same. This is a circular which has been issued on gift of free sample. In that, they have specifically mentioned that in case if you have given as in a gift of free sample, no credit will be allowed. But different situation, like where there is a buy one, get one free. In such circumstance, they are saying that it will not be considered as a gift of free sample, because buy one, get one, even though a supplier is giving, the cost is considered and value is considered in a way, tax is discharged. So therefore, they are allowing the ITC on the same. Another, in FAQ, they have clarified about the warranty. In case if I am covered under a warranty, obviously, if any part need to be replaced, my vendor is not going to charge me for those parts because it is covered under warranty. So whether it can be said that the item which is supplied is free of cost? No, because when I am purchasing a warranty or when I have purchased the product with warranty, cost is included in it. Therefore, ITC will be allowed on the same, and there is no need to reverse the ITC on ground of being free supply. These are few advanced ruling. It is not that this advanced ruling are straightforward applicable to all. We just has brought in for the purpose of only discussion. Now, gold coins, as we know, most of their distributor lines, they give targets that you have to achieve this target. Then they will give either you the discount or they give you some goods item, like in this case, golden coins they have given. So over here in advanced ruling, it has been held that it will be treated as gift and therefore no ITC will be eligible. Even the incentive is also given by way of foreign or local trip. That also they have considered as free supply and therefore ITC will not be eligible. Expenses incurred toward promotional scheme of royalty program or goods given as a brand reminder, that also they have said it will be treated as a gift and no ITC will be allowed. But all these are disputed. It's not that. Key, it's a straightforward, it's not a decision. These are all advanced ruling. On case-to-case basis, it will be determined whether you are eligible for the same or not. How your terms of contract or agreement entered, it's matter a lot, and how you maintain your documents and books is also plays an important role in determining the taxability and ITC availment. Then with the block credit, we come to apportionment of credit. Apportionment of credit, what we mean to say over here, obviously, when you are doing a business, you may be providing taxable service and you may also be providing exempted supply. Taxable service, let us for simple purpose, taxable service is one where we are paying GST, which is a supply under GST. And exempt, which is either not a supply under GST, that is a Schedule 3 item, or it is exempted by notification 12. So there may be a case in your business, you are having a mix where you are having a taxable plus exempt supply. So therein this section 17 come into picture, which discuss about apportionment of credit. So if you are supplying a taxable supply, then the expenses which has been incurred for the providing the taxable supply, ITC on the same will be allowed. But where that expenses have been incurred for providing exempt supply, then ITC will be disallowed. In a similar situation, there may be a case where this one-to-one correlation is not possible. Means there may be expenses which are common to both, like auditor, office-related expenses, security service. In that case, it is not possible to divide it, how much relate to taxable or exempt. So in that situation, your apportionment of credit, section 17 comes into play. Read with rule 42 and 43, determine how we should go for availment of ITC. So as we discussed, if you are ITC is used for a taxable and zero rated supply, ITC is 100% eligible. Where it is used for non-taxable, exempt or nil rated, then ITC will not be eligible. Common ITC. This is exempt and non-taxable supply, we already discussed. So for common ITC, input and input service reversal is followed by rule 42. For a capital goods, it's a rule 43. You have to follow those rules in order to do your ITC reversal working. Now, these rules have been further divided into other construction and construction. For a real estate, they have provided a different manner of calculating the reversal. And for other than real estate, they have provided a different. But over here, we will be basically concentrating on other than real estate, how you have to proceed for the reversal. Even what will be the value for rule 42 and 43, they have specifically defined what will be considered as a value of exempt supply. Like we discussed what is exempt supply, schedule 3, and which is covered under exemption notification. However, for rule 42 and 43, that is not the case. They have given how you have to calculate the value of exempt in order for the purpose of calculation of ITC reversal. Now, they are saying that you have to include this further things in order to calculate your reversal under rule 43. So what is exempted under GST, that will to form part of the value. Apart from that, what further items you need to add it to get the rule 42 calculation, that also has been provided. So they are saying apart from exempted value which you are providing, you have to also add sale of land and building. When they say sale of land and building, they are saying about the sale of immovable property, which is covered in schedule 3. So if you have done any sale of land and building in that any year, you have to make sure you include it. Though no GST is payable, it's a schedule 3 item. But for the purpose of rule 42, you have to include it in the exempt value. Transaction in securities and outward supply included under the value of exempt. Why?
One moment, we just lost you here. So participants, the missed portion is while computing the exempt supply. See, ideally, Schedule 3 transactions are not to be considered for the purpose of GST at all. They are neither supply of goods or not supply of services. Only the para 5, where there are activities which are relating to the supply of land, it has to be deemed as exempt supply for the purpose of Chapter 5 while computing the input tax credit, common credit reversal. This is again one common area where people make mistake in terms where they are computing the common credit reversal. Again, the question that comes is, what does the common credit represents? Does the entire purchases in my P&L account goods, both inputs and input services, would it be common credit? Again, the answer would be no. So every purchase you are making, if you can allocate and say that this is towards taxable outward supply, you will 100% get a credit. Let's say I am a dealer and I am dealing two different products. Like say I'm dealing with mobiles and some special purpose kit which is given exemption. And I am manufacturing these two items. If I do not have a segregation of procurements made towards the taxable items, procurements made towards exempt items, then all the procurements would be called as common credit. If I have a separate unit which is manufacturing the mobiles, if I have separate unit manufacturing some different equipment which is exempt, then I can identify and say that these are specifically taxable, so you take full credit. These are specifically exempt, do not take credit. If we have the segregation, can there be a common credit? Answer would still be yes. You have your administrative office, you have your factory is specific, but the administrative office where you have accounts directors who are sitting, that is common credit. You have a statutory auditor where you are paying the audit bill is a common credit. So most of the below the line items of the trading account would be a common credit. So you have to make this segregation and identify, compute this month over month. Please continue, Ashika.
So as what sir said, that total input tax is input, input service and capital goods. And as we discussed, input and input service is dealt by Rule 42. Now, as per Rule 42, now you have to divide your ITC. How you will do? First thing is you should exclude the ineligible ITC from the total ITC which is there. What are ineligible will be? Which is not in relation to your business, which is in relation to exempt supply, or which is of nature of block credit. So that all once excluded, then you will get the eligible ITC. Once you get the eligible ITC, which is exclusively and directly related to taxable supply, that will be fully allowed to you. That ITC that is fully allowed to you, will you separate it from your eligible ITC, and then you will get the common ITC. Now, as sir said, then on common ITC, you have to do your proportionate reversal based on the turnover. That is exempt turnover, which we discussed how you will derive the value, divided by total turnover. That proportionate reversal you need to do, and you need to report in your GSTR 3B. The reporting in GSTR 3B we will deal in further slides. Similar way for Rule 43, which relates to capital goods. Now in capital goods, there is a little different mechanism for calculating your ITC reversal. Over here, your ITC reversal depend upon the life of the asset, which the GST and the GST has been fixed for 5 years. So it's now depend how. So now what you will do is you will divide your ITC avail on capital good by 5 years. And this details need to be furnished on a monthly basis, even for Rule 42 and Rule 43. Both monthly basis you have to do. And then at the end of the year, again, you have to do yearly basis. So it will be divided by 5 into 12, that is a 60 month. And on proportionate, again, that turnover base, you have to do your ITC reversal on capital goods. this is where your capital goods, it's all deals with when the capital goods was used for eligible business, then then it was used for fully eligible taxable supply, then it converted into an exempt supply. In such circumstance also, you are required to reverse the ITC. Similarly, vice versa, if you were exempted and become taxable, then also you will be eligible for the proportionate part of the ITC, which is used for the taxable purpose. Like I discussed, that you have to do monthly computation, and after the end of the year, you have been provided a time limit till September to do the yearly reversal of the ITC, which need to be reversed under Rule 42 and 43. Like as we are standing in 23-24, for 22-23, after doing monthly, before September, you have to make sure you do your workings for final working for 22-23 on a yearly basis. So this is a summary of what we discussed. If it is exclusively for taxable, you are 100% eligible, no reversal required. If it is related to zero rate, then also you are 100% eligible. If rules other than, obviously, no ITC will be disallowed. Exempt, no ITC. And partly for business or partly for exempt supply, then you have to follow Rule 42 and 43. Now, blocking of credit ledger. Now we deal about the eligibility and condition of the ITC, what is covered under block credit, how you have to apportion your credit. Now coming to the point where your credit can be blocked by the department officer. One of such condition is where they can block is if they identify or they have a reason to believe that input credit which has been availed, it has been availed on the basis of invoice which is issued by a person who is in non-existence, or if has been availed without receipt of goods or services, where tax has not been paid to the government, where the registered person availing the credit has been found non-existent or is not conducting the business from any place for which registration has been obtained. A registered person who is availing credit without the possession of invoice or debit notes. Then the commissioner and the officer which has been authorized, proper officer, have been powered that on been having the reason to believe that any of the circumstances there, then they have the power to issue a notice for blockage of credit. So they will straightforward go to blocking of your credit. Under Rules 86A, there is no mentioning of the fact that before blocking that they need to give an intimation to the SSC that they are going to block the credit due to any of the circumstances. Though rule doesn't provide for it, but in many high courts ruling, it has been held that no such cohesive action should be taken without giving an opportunity of being heard to the SSC. So if any of your circumstances, there have been any blocking of credit, which you came to know about that has been happened, you can go, you can talk to the officer, you can ask them to give you an opportunity to explain the situation so that you can get your credit unblocked. Further, there is a time limit. It's not that once he has blocked, it will be blocked for infinite period. Within 1 year, he has to make sure he unfreeze your account. He can't keep the credit blocked as he wants. So if any of your circumstances, there have been blocking of credit, you can go, you can present your case and ask the officer to get it unblocked, and also check for your time limit. If time limit has got expired, then it should get auto unblock.
Yeah, one point which I would like to add here is, first we saw when one can take input tax credit, those are preliminary conditions. Then we developed in saying that you need to have, even though you have purchased, you need to have a visibility in your GST or 2B. Even though it is there in GST or 2B, there are certain conditions which Ashika explained, which are called blocked credit or common credit reversals. Only after that you can take the credit. For a moment, even that has been fulfilled and you have taken the credit and the credit is there in your electronic credit ledger. Still, there are certain situations and circumstances where you cannot utilize the input tax credit. One of that is Rule 86A, where the officer believes that no, you are taking the credits. Please note here, it is a officer is believing, he has a reason to believe that you are taking the credit on the strength of an invoice where the supplier is not existing, or it is a fake invoice. In the beginning of the session, someone has asked, without receipt of goods or services, can I take? The answer was no. So if you have taken, the officer has power. So someone was asking, how can he do it? Yes, he can put a freeze into the account, saying that assuming you have a electronic credit ledger balance of 20 lakhs, let's say he can apply a freeze saying that up to an amount of 3,50,000 you cannot avail. So while doing an offset, even though you see a 20 lakh balance, you will still be able to use 16,50,000 balance. So there are some more, two more other conditions, but please pay attention. There would be situations where you will still lose the opportunity to utilize the credit, even though the balance that exists in the ledger. Please proceed, Ashika.
Another is restriction on use of amount in electronic credit ledger. Means in this, it has been provided, you can't use more than 99% of your 99% of your output tax liability to pay with ITC. Now, this restriction is as of now not automated on the GST portal. It is now SSC on self-assessment basis. So you have to make sure but this is subject to certain condition where your value of taxable supply exceed 50 lakhs rupees, then only this condition will come into picture. If your value exceed 50 lakh, make sure you pay only 99% of your output tax liability with ITC. Balance you have to pay with cash. But this restriction will not apply in certain situations. If it is a proprietorship concern, then the proprietor, company, then the directors. If it is an association or board of trustees, then its members. If they have been paying more than 1 lakh rupees as income tax in the last 2 financial years, then this condition will not be applicable. Or where you have received a GST refund of more than rupees 1 lakh, or where in totality you have paid 1% of your total liability in cash, then also this condition will not be applicable. And obviously for government undertakings, for government department, public sector and local, they have not put any of this such restriction. So in this also, most of the SSC we have find that they lapse to comply with this issue. Though it is not automated now, but due to this also, they may try to impose on you at least general penalty, which is also not less, it is 50K. So this
So definitely compliance of the law is very important.
So you have to make sure that if you fall under this restriction, you comply with it. Another major rule is difference in tax liability versus R1 versus 3B. Now, most of you must have received ASMT 10, audit notice, investigation notice, and the most common issue which you would be finding is R1 versus 3B, 2A versus 3B. Now, if there is a difference between R1 and 3B, in the Act, the officer have been provided the power to directly initiate a recovery. Means they don't need to intimate you. They don't need to give you an opportunity to explain the difference. The difference may be clerical or it may be actual difference. Whatever may be the reason, they can straight away initiate the recovery. If you would be knowing, recently they have issued an advisory for bank account validation. The reason for issuing that advisory for bank account validation was to make sure the bank detail which you have given is active. And it is the bank which you are using for your day-to-day business. So that when they initiate the recovery, it should not be a case that your bank account doesn't have a good balance. That's the reason that advisory was issued and they have started initiating bank account validation. Because in certain cases, it has been happened that the bank account detail which has been given, either it has become inoperative or inactive. So the officer were not able to recover the amount, even by doing initiating the recovery notices. So you need to be careful. You have to make sure now compliance of 1 and 3B and 2B versus 3B or 2A versus 3B is so important that any month, even a simple clerical error of adding a 10 will have adverse scenario or will have major impact on your day-to-day business running. Though this rule has still not been effective, but multiple ASMT 10s have been issued on the basis of R1 and 3B. This I already explained that they have a power to issue, do the direct recovery proceeding. Though courts are saying that you should provide an opportunity. Now, another major important topic of discussion today is reconciliation between 2A versus 2B versus 3B. 2A and 2B, it's been more than 5 years under GST. Okay, the way the law is proceeding, the way the changes are coming, it's very important to keep up to date because this law non-compliances are having very major impact. Even now, the problem is that the vendors, the customers whom you are dealing, they will also not deal with you if you are non-compliant because your non-compliances will result into their business also. If your supplier doesn't file R1 and 3B, who is getting penalized? So now more or less, they have put a condition on the SSCs only to make sure their counterparties are compliant. So one of this way to check is 2A versus 2B. Like we had discussed in the initial, that 2A versus 2B is basically nothing, is your inward supply details on which your supplier has shown in GST R1 that these are the transaction he or she had happened to with you. And now it also show that whether your supplier has filed your 3B. Now 2A is basically on the basis of date of invoice. This form get auto-populated on the base of filing. Once your supplier has filed their GST return based on the invoice date, it get auto-populated. But 2B is on the basis of date of filing. Means if April month invoice is filed in June, in 2A it will show in April month, but in 2B it will show in June. And your ITC eligibility under 3B is dependent upon on GSTR 2B and not on 2A. So you have to make sure when you are doing your monthly RECO, it should be always with GSTR 2B. But when you are doing your yearly RECO, then it should be with 2A.
So here I would like to add a point. Yeah, maybe just take to the next slide, Ashika. Yeah. So you can see an example where the return period where the supplier has filed is below. It's a, let's say June 20 GSTR1. Supplier has filed in June, July, August, September, October, November, December. So the June 20 R1 has been filed in any of those months. It will still be there in GSTR 2A of June. Even though GSTR 1 is filed late, my GSTR 2A will say the purchases for the month of June will still be in GSTR 2A. Since the supplier is filing late, the month in which he filed, in the first case, it will be there in June 22B. In the second case, it will be there in July 22B. Now, the month in which the R1 is filed, in that month 2B, it would be visible. I'm sure now more or less everyone are clear. So the point here one has to be very mindful or will have to notice is what is that input tax credit I have to take in my GSTR 3B? Which credit I have to use? As Ashika said, if you are reconciling for the month used to be, if you are reconciling for the year used to year, irrespective of that, I would say that the maximum the credit that you can avail in any month is the value that is there in GSTR 2B. So if your 2B is showing 100 rupees, you should only claim 100 rupees even though you made a purchases and the input tax credit in your books of account is 160 rupees. So you should be ignoring 160 rupees and you should be claiming a credit of 100 rupees which is there in 2B. The point that comes is like, how long I have to carry on doing this reconciliation? My answer to this is you need to rely upon a software. Today, the softwares are intelligent enough in taking the data from books of accounts automatically and from the portal automatically. In fact, it would be a futile exercise if you are doing a reconciliation every month and then waiting to take a credit post reconciliation. After the reconciliation, you will still end up taking the same credit, whatever the upper limit that has been set in GSTR 2B. So your reconciliation of the credits in the books versus the input tax credit that you have taken should be independent of filing of the return. In a while, we will show you about how to file the information in GSTR 3B and handling of the credits. You get a fair idea that you will have to go with the 2B if there are some, and very unlikely. There could also be a situation where some fake credits coming into your 2B accounts, then definitely you need to be watchful. Just because there is a credit in 2B, you cannot take the credit, right? So only for that purpose, you need to see if some unknown credits are landing into my account is what you have to see. Maybe Ashika, let's walk through the GSTR 3B format and where, in which place we have to take the credit.
Now, reporting of ITC is very important. Now, as we know, data in ITC is auto-populated based on GSTR 2B. All the data which is auto-populated based on GSTR 2B is shown in your 4A5. So all other ITC, they show over there. Now you have to do the proper reporting of it. Now the ITC which is eligible and which is in relation to that month, then you have to show in 4A5. ITC which is shown in 2B of that month only, but you are going to avail in next month or any subsequent month due to the reason of any which has been discussed in section 16. Either invoice might be raised, but goods or service may not be received. Or it may be also a case that another reason could be that you may not have made payment to your supplier. So in that situation, even though that will be there in 4A5, but as you are not going to avail that ITC in that month, so you will show it as a temporary reversal in 4B2. Ineligible ITC, which obviously will form part of 4A5, and the ineligible as it is a permanent reversal, you have to show in 4B1. Now, this ITC, where we have written no, which is GSTR to be auto-populated, they themselves show in 4D2, where your place of supply is not equivalent to your location of supplier, or where the GSTR1 have been filed after the due dates. So means after the due date means time limit to avail the ITC. Where there is delay filing after the time limit for availment of ITC, which we have already discussed in our previous slide, that is 30th November. So in such circumstance, it will straightforward will show in 4D2. Then, like we discussed about the temporary reversal over here, where it is related to this month, but you are not availing it. So by you are showing in 4B2, like where vendor uploaded the goods or services but not received. Material received but pending approval and rejection. We have given some instance where it can be a situation. Invoice not received to account the department and not updated. So under circumstance, even though it is showing in 2B, 4A5, but due to non-compliance of other condition of 16, you will show as a temporary reversal under 4B2. But when you will be availing, at the time of availment, you will form it part of 4A5 and 4D1. Reporting of table 4 when available. So 4A5 temporary availment to match with GSTR 2B and temporary reversal to re-avail in future, like we discussed just now. Then obviously, which is my current month, it is there in 4A5. Plus, that may be a situation, the ITC which I have not previously availed due to any circumstance, may be missed or maybe all the condition of section 16 have not been fulfilled. Now, which has been fulfilled now. So what I will do, to my current year availment of 4A5, I will add that ITC which I am going to avail now of previous month, and the same amount I will also report in 4D1. This is only a manner the government have prescribed just for the purpose of proper reconciliation, because from this they will come to know how much ITC you are availing of previous month and how much ITC relates to current month. It will facilitate them easy reconciliation. Like this is the summary where 2B in month 1, it is showing 150, but in books, like you have not received the invoice and you have accounted in month 2, 150. So how you will proceed? In 2B auto-populated of 3B in first month, it will show in 4A5. And what you will do, you will show as 4B2 as a temporary reversal. So your net ITC availment for the month of 1 will be 0. But as you are going to avail in month 2, due to all the compliances done, then you will add in 4A5 that 150, and similarly will also show in 4D1. So net ITC over here, though it's coming 150 because we haven't considered current month ITC, just for clear picture of how it need to be reported to be shown. Now, while filing 3B, what check you should make sure that we are discussing this only from the point of view of input tax credit, not other. Over here, table 4 is the only point of discussion. So while filing your 3B, in order to ensure that your ITC is properly reported, what you should do, as we discussed, you should make sure you do a proper reconciliation of books with your GSTR 2B. Then identify what are the credits, which is basically only in books and only in portal. The ITC which is appearing only in books, you should follow up with your vendor and make sure they furnish those details in their GSTR1. Which is only in portal, check whether that ITC actually relate to you or there is a misreporting by the supplier. Under both the situation, you should take an action. If there is a misreporting by your supplier, you should ask them also to change. You should not proceed and claim those ITC, because in future you may get into trouble due to non-compliance of other condition of section 16. Similarly, which is only in portal and transaction relate to you, and if you have not accounted, check for the reason for not accounted, maybe goods not received, or maybe some negotiation, some dispute might have happened at party. So whatever need to be done, take proper care. Another thing is you should also ensure that you avail the ITC within the time limit. As discussed earlier, 30th November is the last date to avail the time limit. Now, as we are standing in 23-24, do your GST reconciliation of 22-23 books versus your GSTR 2A, and books versus GSTR 3B and GSTR 3B versus 2A. All the dynamic record, do it, identify what the reason for it, and take the appropriate action, because you still have a time. So these are all the instances you have to take care, plus reversal. Like over in earlier discussion, we have discussed that there are cases where you have to do reversal of ITC. One of the circumstances like payment not made to the party within 180 days. So under such circumstances, make sure you reverse the ITC and re-avail when you make the payment. Then when your supplier has not filed your 3B, when the supplier is not filing 3B, then also ITC is disallowed to the recipient. So make sure if any of the circumstances there, you do. Why? Reason is interest. Interest plays a major role, because when the department comes and they ask you to reverse, obviously audit happened for 5 years. They come after 5 years. All this discrepancy resulting into interest at the rate of 18% plus penalty, which at the first instance they invoke at the 100% saying fraud case. So amount is quite huge. To make sure proper reporting will result in proper compliances and reduce litigation. So with this, we come to the end of our session. If anybody have any query, they can ask for it, write in chat box. And this is our GST group. GST update group. If anybody wants to be part of that GST update, they can scan this QR code and can become part of it. Every day we update over here, whatever the new changes or new news is coming under GST.
Yeah, any questions to the participants? Now we will take up the questions. Maybe you can raise the hand, we will unmute you and you can ask the question. You can also put your question in the chat box, we will take up those questions. And as Ashika said, feel free to contact us through WhatsApp also. Here, this is the number you can log in. You can just open your Google Lens and you can just scan the this code. You will automatically be directed to our WhatsApp group. Let's take up the questions. Ashika, questions that are there in the chat?
Yes, sir. So one of the question is, what about post-sale discount availed from supplier? In this case, are we going to reverse ITC on our bill? Please explain.
Yeah, go ahead.
So post-sale discount availed from a supplier. Now the thing is that whether this post-sale discount is a part of the agreement or not. Now discount has two things, one which is pre-agreed and which is before the sale. So when it is known at the time of the supply, then it is a question of valuation, not a question of ITC reversal. Now coming to the part of where it's not a question of valuation, means where your supplier has paid GST on 100 rupees, as it is a post-sale discount, obviously your supplier is not going to not going to issue you a credit note in terms of GST. Okay, I'm assuming that what you are asking. So as my supplier had made a tax payment on 100%, so I am of the opinion that I should also not be asked to reverse ITC on this account, because 100 rupees invoice, 18% tax, 18 rupees tax has been paid to the government. That is duly reflecting in my GSTR 2B also. So I should be eligible for ITC for the same. But the department point of view is, as you are making payment less, they caught hold of you in payment within 180 days. So they say, as the discount, you have made payment less, so you should reverse the ITC. But it's a question of dispute.
So if you look at the words that are there in Rule 37 and Section 16 is the liability to pay. When your supplier has issued a credit note, that means you have no liability to pay. So the payment could also be not just every time by through cash, it can also be an account transfer, offset adjustment. So in this case, you will not be hit by Rule 37 or 180 days condition. And if the supplier generally today they issue a valid tax credit note, GST credit note under Section 34, but there could be situations where they issue a general credit note. And I'm presuming this post-sale discount that you are getting it because you have achieved some turnover or you have made the payment to your vendor within the specified period. It could be a cash discount which have been agreed earlier, not agreed. So in any case, unless otherwise this is a credit note which is appearing as per Section 34, you don't need to reverse any input tax credit.
Another question. What is the recourse available if supplier don't pay the amount to the department? Only filing suit for recovery is the only course of action. Kindly confirm that the department come to our rescue.
Answer is no. The department definitely will say that you have availed the input tax credit. The burden of proof on you is you fulfill Section 16 conditions. One of the condition is the supplier should have paid the taxes. Since the supplier has not paid the taxes, you have to reverse the input tax credit. I don't think that any legal recourse at this point will be helpful. Only for the initial periods of 17, 18, 18, 19, they have given a relaxation. Even there, the relaxation was not from the mechanism of non-payment of the tax. We have to get a declaration from the supplier. They have paid the taxes, but they have wrongly reported in GSTR1 as a B2C, which was like a technical glitch. Only there the relaxation has been given. Hence, the government is very clear. You have to ensure that the supplier is paying the taxes, only then you can take the input tax credit.
And another is like now most of the corporates or companies, what they have started doing, they hold the payment of GST until and unless that it does not reflect in GSTR 2B. Once they see in GSTR 2B transaction is showing it is reflecting and it is showing 3B filed, then only they are releasing GST amount. So this is also the practice now corporates are following. So for future, you can use it. Another question, some of the recipient company have adopted a practice to release.
Whatever you have said, the same thing.
Hence the supplier need to pay an advance from his own pocket and tax portion to the government. Is there any issue on this except the cash flow issue for the supplier? What about supply made within a warranty period as the customer will not pay for it?
Yeah, so
This-
this again the supplies of the warranty period. You know, when the circular which Ashika has given an example, see, whenever you are buying some goods and it comes with, say, let's say a warranty saying that I'll take care if something goes wrong. So when something is going wrong and it is getting replaced, whatever the original price you have paid for, it is including the warranty products. So for the warranty, supplier is not going to issue a new invoice, nor you are going to get a new credit. And the material, original material got replaced with a new material, so you don't need to reverse any input tax credit.
So this were the only question.
All right. So maybe if you have any more questions, you can actually unmute yourself and you can also ask the question. Otherwise, we'll go to the next part of the session, which is the technical aspect where we will see how we can connect the tally data to a Power Query and generate a financial statements the way we want. And today the Power Query is more important, where the volume of the data goes up. And in the upcoming sessions, we will show more about the features and the benefits of Power Query. Yeah.
Hello.
Any questions, sir?
Hello.
Yes, sir.
Yeah, good evening, sir. Myself, Rajesh Butoda. I have one question.
Yes, sir.
Yeah, suppose I have not paid an amount to my vendor more than 180 days, then I have reversed my ITC in the books. But
Yeah.
I have not paid any, interest and anything, because I have the sufficient balances in my credit ledger account. So even though if I have the sufficient balances in my credit balance, so even though I have to pay the interest or not
All
for
right.
that?
Yeah. So non-payment of interest where you have a credit balance is applicable only towards the tax payments. Now, this rule doesn't envisage about non-payment of interest even though you have a credit balance in the ledger. So it is expected that you are supposed to reverse. We are not talking about utilization. If you have utilized the credit towards the taxes, now, even though you filed the return late, only there the relaxation has been given, where to that extent the credit balance is there, I will not levy the interest. So here the rule doesn't give a leeway or relaxation of non-payment of interest. Again, this is a question that you can, in the judicial grounds, you can raise a request saying that I have not utilized the credit, so hence the payment of interest would not be applicable. A valid point. Again, it has to be a legal fight.
Thank you.
Any other question to any participant? Can we move to the next part of the session in case if there are no questions? Let me invite Tarun. Tarun, you are there? Stephen, can you make Tarun as co-host? All right. By the time Tarun comes up, let me share the screen. All right. So what we have, a quick recap, what we have seen in the last week is the Power BI is more for as the Power BI says, it is power business intelligence reports. There are three things one needs to be looking at in the Power BI, which is the left side, which this corner that is there, that we are going to use it again today, is you have report section, data section, and the relationship.
No.
Okay. All right. So today we will be seeing how do we connect the data. Yeah, Pawan, Tarun, whenever you're ready, we will start. No problem. So that's what we have seen. If you can see on the left side of the screen. 1 second. Yeah. If you see the left, this is a standard Power BI where on the left side of the screen, you can see the report section, data section, and the relationship model. Now, what we have seen in the last week is how we can get the data from external sources. So the data, we have seen how to collect the data from an Excel book, Power BI, another data set, web, various things. Today we will see about, and in fact last week we have seen one small where we used the ODBC connectivity. We have used a Tally ODBC connectivity and connected the data. So here this week or this time what we will do is we will see preparing a financial statements. Let's say a trial balance. Let's say we have this trial balance where there are so much of the information that is available, and using this, let us prepare a sample financial statements. Now, the Power BI not just allows a direct connection, you can also use some queries. So today what we will do is we will build up connecting the data using a small query and manipulate. We have seen this using the Power Query in the earlier, when we had Excel Power Query session, where we have explained about how to use M language. We will adopt the same feature of M language in the Power BI Power Query, and we'll connect to a Tally data set. Now, what we are doing here is applicable if your data set is not Tally, SAP, ERP, any other application, you will still have the same thing. So what we will start with is we will start with creating a data with a blank query. So I will start with a blank query. So you have got a Power Query editor, which was same like a query. Now, let me say the query is get trial balance. So I'm saying get trial balance. I will open the data. Let me just 1 second. So you can either write a query here, which will be a little complicated. The best always is you can see in your home button in the query, there is an advanced editor. always use advanced editor so that you can get the query in a detailed way. Now, let me click on the advanced editor. So editor would always say, what do you want to do from the source wherever you have to get the information. After getting it, what do I do? So where do I push the data, which will get converted into a table format? So Tarun, over to you, and I will chip in wherever it's required. Okay, so here's some query which is written. Again, it's a simple XML. Hold on for a moment. I'll just walk them through the query. 1 minute. Let's see which is the period we have the trial balance. So here the books of accounts are starting from April 22 to March 23. So it's only a current period data that is there. April 22 to March 23. We can always say that, okay, I will get the data from 1st April 22 to say 31st March 23. It will not give you an error. 12th March also it will take the same thing. So here there is a simple XML query. And in the last week, I have said this is where we are connecting. There is something called localhost colon 9000. Where what is this localhost colon 9000? You can also always go. Let me just create one. You can see the moment I've typed localhost colon 9000, it is saying that Tally Prime server is running. So which means it is connecting to Tally. Where does this localhost is residing? This localhost is actually residing here in my F1, my settings and my connectivity. I am able to connect. So you can see this is where 9000. So which means a port called 9000 is made open by Tally for exchanging of the data. The data is getting exchanged from the Tally application to a different applications, which can be where through browser or any mode, the data can be connected. So we are using that and connecting it to my Power Query. So I said on this port, basically this is a trial balance query which is written from this date to this date, and store that in trial balance one name TBL02. Done. Now you can automatically see whatever which has happened in the Power Query, the steps have been written. The steps have been written. What happened in the Power Query? Let me again explain you. I had in my source, there is a URL. I said, go to this URL, find this in this body, you ping this body. Of course, in the body, I said the from date and to date, there were values which are there. I have given all those things and did some number formatting, all those things. All this, whatever you have done, are visible as a steps to the right side of your screen. If you see the right side of the screen in the applied steps, is like from date. If I click, you can see on the from date is 1st April. Okay, it is showing 2012. That's okay. It was supposed to be 22 type dash 2012. So all those steps are visible. Finally, result is your a trial balance that has come. Now you can further changes to this data here, or you can load it into the Power Query, and in the Power BI you can make the changes. Tarun, please continue. Tarun? Yeah. So now he is creating a duplicate column. We call this as helper column. Why are we creating this helper columns? Is you have all the ledgers, but I want to know which is balance sheet, which is P&L. So we are creating a headers to segregate and identify from the financial statement perspective, what is my balance sheet, which are the balance sheet items and which are P&L items. Generally, in Tally, you can also add additional query called is deemed positive or is revenue. So we will use that to classify our balance sheet and P&L. Kumar is asking, can you show us the data from where the data is resourcing? I'll show it in a while. So we are now creating income, expenditure, asset, and a liability classification for all the items that are there in my balance sheet, so that we can quickly create a financial statements. So what we can do is we can quickly select all our assets ledger. One minute, one minute, one minute, one minute, one minute. Hold on, hold on. By the way, just doing it only for the purpose of quick doing it. Yeah, replace this as expense. By the way, this is one-time exercise. We can now load and show the P&L. So on the left side, when I say close and apply, so from the Power Query editor, it is getting the get TV query, you can see, and creating a connection in the model. So on the left side, the data is getting populated. So now data has come here in the background, though not visible to us. So we need to get the data. Let me just show it to you what we have here. On the right side, you can see there is a get TV. The data has been imported now in a while. So let's view the data. Click on the data view. So you have all the data, right? Let's only take income and expenditure and show us. Let's create a simple report of income and expenditure, let's say, which needs to be presented to the management. So we are now creating a report. I see some of you have missed the earlier session, so it might appear little difficult to you. No worry, will again walk you through whatever we have done. This is same like the pivot table that we see. One second before applying the filter, just remove the filter. One moment, remove the filter. For the ease of it, for the people to understand, for a moment, assuming, by the way, the purpose of the Power BI is we prepare a template, a reporting template, which is shared to the management. And all that they need to do is change the period, just refresh the data. For a simple understanding, let's say my bank overdraft account, which is visible here, is 1 crore 30 lakhs is your bank overdraft, 1 crore 30 lakhs 57,000, right? So what we will do is, let's go to the tally and see how this data has come. Now, I think add the more ledgers to it. Let's in the filter, let us get the because it is a combination of multiple ledgers. So let's get the ledger name so that we know which ledger. Okay, then let's also take cash. Yeah, again cash. We have one ledger. All right. So now you have cash here, you have bank here. Cash, I think there is only one ledger. It's easy to understand. Data. Okay, let's not take net of it. Let's take only the closing balance. Since we are preparing the financial statement, we will take the closing balance. So what you can see here is there is a closing balance 11,684. 11,684 is the closing balance that you are seeing here. Is the 11,684 closing balance which you are seeing on the Power BI screen. So what we will do is let us just put a receipt, okay, and receipt from a receipt from me from 50,000 rupees. All right. So now you can see the closing balance is 61,684. The closing balance here is 61,684. Say you are in the finance, you have to prepare P&L month over month, and you have to prepare a cash flow statement on a real-time basis or a weekly basis, and you have to do. So here is a template. Like I'm just giving you an overview. Here is a template that we have set. Whatever that needs to be done, all that you will be doing is whenever you have to send a report to the management, in your home button, you see there is something called refresh, like in a pivot table, what we do a refresh. I just hit this refresh button. You can automatically see the data it is connecting to the backend wherever it is. See, it has automatically updated the balance from 11,000, it had become 61,000. That means any data that you have connected. So in fact, someone was asking, can I connect to SAP? You can connect to anything. It could be SAP or anything. Today you should start using the Power BI. And just for your sake of understanding, will this become very heavy? Let me just show you this file. Let me just save this file in my desktop, and PB sample file. And you can see this is not going to be a heavy file, which when you send to the management or anyone, this a TB sample, this is just a 142 KB file. You can create reports, everything. It has underlying data beneath it. When this file is sent, it will automatically will carry the data, it will carry the reports. Right now, we have not created anything. Tarun, can you just prepare only P&L account, income and expenditure? Bring the underlying values also. The ledger names, the parent group. Now, parent will be under the primary group. Parent will be under the primary group. So here you can quickly see that an income and expenditure has automatically been created. So I have a revenue of 15 crores and expenditure of 18 crores, which has already been set. And you want to explain more, you can drill down, drill down each of the item and just to get an understanding where the expenditure is being set. This is simple like your Excel file. Please note, we are just attempting to see what the Power BI is. Like we have, so the objective of the session is you try to connect with the data and just get a hands-on feeling of how the data gets translated and connected. Tarun, anything else? What's next that we need to show to them? Tarun? Yeah, what else you intend to show? Yeah, M language is something I would suggest everyone to learn, and you can use this to effectively manage your cash flow, effectively manage your debtors, receivables, sending an outstanding statement. I can just apply a filter in the last column, only creditors. Again, in the creditors, you want to get the bill wise underlying reference of a party. Anything you think is possible. The data is here. You just need to add queries. Right now, you only have query one get TB. You can create a new query, add both of them. We can do like the way we have done the P&L, we can do the balance sheet also. Of course, we have it will take time for him to set a template mapping assets liabilities in that way. Even balance sheet is possible. So we have just created the P&L mapping the incomes and expenditure in one go, and it is like a drill down report. You can change the report into any of the way that you want to see. Let me now, for the sake of everyone, let me just come from the beginning. Since that instead of showing preparing the balance sheet and everything, I just some of you would have missed, for some of you it might be little difficult to understand, whatever. Let me again come from the beginning. Let me start with a new file. All right. So all that we have done is we established a connection with the database. Here the database is Tally. The next database could be anything. Since it is Tally, I am saying I want to get the data. I want to get the data by writing a blank query, because I have already written a query for the sake of for the ease of presentation.
Yeah, ma'am.
I have shown you.
I'm connected on desktop now, so I can't speak. So I told already.
Yes. So instead of writing the query here, what we have done is we have used the advanced editor so that it's easy to type it, the query. So a query was already, it was prepared. We'll just take the query that we already had. Yeah, here is the query which is written, and we will use the same query here. What was this query doing? This query is trying to connect to a URL which is localhost 9000. Localhost 9000 means it is understanding that you are connecting to the tally, and after connecting, whatever the data you want to get it. So I want a financials from 1st April 21 to 31st March 22. This is what we have said, and the data got connected. Once the data is connected, you also have an option to transform the data. So wherein Tarun had actually duplicated this column, he has duplicated this column and did some transformation of the data. After the transformation of the data, I can just close and apply. So from the Power Query, all the data is now shifted back to your Power BI report. Here in the Power BI report, whatever you intend to do, you want to prepare a charts. You can see on the right side, there are various charts that are available. So P&L income, by customer sales, all those things, anything you want, you can prepare those charts. So you can visualize the data. So he had actually brought in a table. He has just dragged, and you can just drag and drop here. And from my query, on the right side of the screen, you can see there is a query. From the query, what do you want to hear? Let's say I want my creditors list. Okay, let's say I want my sundry creditors and my sundry debtors. I can just list the sundry creditors and the sundry debtors, and whatever is their balance, I can just get those balance here, right? This is like filter. You can also apply a filter to the data. Do you want all the values, or you want only some of the values? Since we are saying creditors, I can just put sundry creditors, and only the sundry creditors list has come. So one report is ready. You can also say, you can filter. Okay, you can further filter. Say I want the balance, the creditors whose value is more than, let's say 500. It's greater than, I don't want to see the small one. I want to see the creditors whose value is more than 5,000, right? I can just apply the filter, and you can see automatically the data is manipulated and it has come. You can further build visualizations on this, aging of it, sorting, all that is the multiple permutations is possible. So you have set a template. Now I can change, I'll just change this name. Instead of page 1, you should set it as creditors greater than 5,000. So you can see at the bottom, this is acting like an Excel file. And you want a new report, I can go to a new report, and you can create any visualizations here. You can put the, last time we have seen putting up a chart. You can create the multiple reports, multiple visualizations, and then save this file. So all that you will do is you will refresh. Let's say this person A Devraj, okay, which is showing 2,72,000 rupees. Let's say he has made this payment. We have received let's say cash from him out of 2,62,000, 2,15,000 we have received from him, right? Some money we have received and all that you will do is you'll just from your data, you hit this button called refresh. Data gets automatically refreshed and it will also show you what is the latest position of the balance of this party. I think we have given the period if we didn't change the data. April 29 to March 22 is the data we have taken. 1 minute. Tarun, can you just go back to this query? A Power Query editor. Go to, yeah, from date to date is, oh, March 22. Okay. All right. So close. Go to tally and post this entry a date before March 22. Go to the tally. 1 minute. So this, well, let us put this as 12th March 2022. Oh, okay, okay. So the books itself, yeah. Just any of you have seen the change in the other thing. Like that, the data gets automatically synced, changed, and you can make any report into the management. Yeah. Rajesh is asking, is it possible to prepare financials as per Schedule 3 map format through Power BI? Rajesh, the answer could be like a yes and a no. No, Schedule 3 format needs a lot of formatting of the data. At least it will take 3-4 days for you to really prepare a template and set it, grouping, mapping of that. Once you have done that setting, then it is a question of refresh. You want to, if you are a listed company, you want to publish it in a quarterly basis, you want to share it in management, it is possible. It's just mapping of the data. You need to do a one-time exercise of that. You will be able to do it. So whatever you can do it in Excel, you will be able to do it. Funny is asking, is it possible to show us with an example data pulled from SAP B1? Funny, I think we have to get in touch offline because we need to set up an SAP system. But just for your understanding, if you have a data SAP running on your system and you have Power BI, you can actually use the get data sources and you try connecting your SAP B1 as one source and you can do it. Yeah. Can you show us again from where the data source is coming from? So Power BI. So we have, these are the various sources you can connect to any of the platform. Can we say, Pramod is asking, can we set P&L and other reports as month-wise reports? Yes. So right now, we have just set the period, the thing you can loop the trial balance to generate the trial balance on a monthly basis. You can add a helper column saying that this is pertaining to this month, and you can just put in the columns the month name. You will get the P&L on a monthly basis. How to use Power BI in case of the tally data is on cloud. So, Pramod, if the tally data is on cloud, all that you have to see is on the cloud, you should be able to log in and access the Power BI. Just that you should be able to connect to localhost 9000 at that point, then you will be able to use the thing. Whichever is the third party server it is hosted, you just need to ask them that I need a 9000 port open connectivity. Generally, most of the third party servers are connected through a VPN. If that port is open, you should be able to do it. In case of multiple locations, can we see a report on console as well as location wise? Rajeshji, this is again a very simple task. As long as you can identify a data field, you can automatically create a visualization based on that. Stock aging is possible. Yes, on a real-time basis, you can always set. Imagine that you are creating a template. It will take time to set a template. Please note, it's not that easy to just set a template. It will take a time to set a template. Once the template is ready, each time it should be refreshed. In fact, you can imagine this Excel file, the Power Query file that you are seeing. Instead of page 1, we have just renamed it as creditors more than 5,000. Like that, you can create as many sheets as you want. All that you need to, what you have to give it to the management. In one Power Query file, you can create a multiple sheets, or you can create a multiple Power Query files, and you just need to hit that refresh button. It will go to the original source, connect the data. So you might not be the accountant, you are only a CFO. So someone is doing the accounts. You want to get a real-time update of what is my sales, what is my receivable position, what is my cash balance, or whatever the checks that I have issued which have not been cleared. Like I have posted an entry in my bank as a receipt, but I'm not finding the thing. I only want to see the BLS. You can create various reporting requirements, and you can just say refresh and get me the latest position. In fact, you can have a timestamp as a field saying that when did you last this value that you are seeing, what is the last date at which you are seeing. You can put one timestamp to that. So you know this on this report which I'm seeing is dated this timestamp, which will come up to minutes and the seconds. You can do that. All right. So with this, we have come to end of today's session, and I thank everyone for being here, attending the session, and you will get a feedback form. Feel free to share your feedback about the session, and also we'll be looking at the sessions for you in the future. As Ashika mentioned, whatever the QR code you are seeing here, you can just open your mobile and just scan this QR code. You will be getting connected to our GST updates forum, whenever we have some GST notifications or updates or important things that we need to communicate. We will be communicating using that groups. And as Stephen mentioned, the copy of this presentation would be made available. You will get a feedback form asking you to give feedback about how the session was for you. After you submit a feedback form, you'll get a link to download the copy of the presentation, and also a link accessing the video recording of this file. Yeah. You can also share us whatever the sessions that you would like to conduct, you would like to attend to. We will create that course and do it. The objective is all the finance professionals should get updated about the GST, and we should also be very hands-on and tech about the day-to-day activities that we are doing. Yeah. If there are any questions, I'm here for some more time. Feel free to ask the questions, else we can conclude the session. And once again, I thank each one of you for taking your time out and attending this session. Thank you.